So what's next for the housing market in Los Angeles? And then what's next for interest rates? Because Barry Habib, the guru when it comes to mortgages, is predicting rates at 5.75 within the next 3 to 6 months. That's our topics for today. So my name is Dan Frio. I do this video every day to inform you guys what the heck's going on with these things and how to buy your first house or your multiple homes or even maybe your first investment property. That's what we talk about here on this channel. I'm a national mortgage licensed mortgage loan officer. That's what I do for a living, folks. I don't do videos for a profession. I do mortgages. I just do this to help you guys understand the housing market. So in today's topic, we're going to talk about the LA house fire, or the fires that are going on out there, and what the supply and demand's looking like right now. And there's a interview with Redfin's CEO on this on CNBC I'm going to show you. And then there's going to be a two-part take to this. Next thing we want to find out is what's going to go on with mortgage rates in 2025, because Guru Barry Habib, and I have great respect for the man, he's predicting mortgage rates within the next 3, 4, maybe 5 months to be about 5.75 to 5.875. So we're going to take an interview with a bond expert and get his expertise on the bond markets and where yields are going to be going as well. And both of these are taking place on CNBC. That's why I love how this system works. So let's get over to here. The first thing I want you guys to do is hear from what's going on out in LA. And then next we're going to look at the bond market. But let's take this away at first. So
Redfin is receiving thousands of calls about sales and rentals in California, everyone looking for a place to stay. They're also getting emerging reports about price gouging. For more, we're joined by Redfin CEO Glenn Kelman and our own Diana Olick. Welcome to both of you. Diana, kick things off.
Thanks, Kelly, and thanks to you, Glenn, for joining us. I know Redfin is based in Seattle, but you have a huge presence in the Los Angeles area. How many agents and how many offices do you have there?
500 agents and 5 offices.
And what are you hearing from those agents, since I've seen that there are reports of them getting thousands of calls on a single property listed over the weekend? What are they telling you?
People are desperate for housing right now, especially rental housing. Redfin agents, like many agents in the area, are now representing people on rentals pro bono. There's really no money in that business, but it's obviously what we need to do to rebuild our community. Many people who listed their homes have withdrawn the listing and instead decided to rent it out, and they're trying to get top dollar for it. So this was already an inventory constrained market, and it's just gotten much, much worse.
And what about price gouging? We're hearing on the rental side, of course. I mean, some homeowners who wanted to sell are raising their list prices, those, as you say, that are taking them off the market to take advantage of rentals. Are you seeing those rent prices just soar?
Well, we haven't aggregated any quantitative data on it yet, but anecdotally you hear about people suddenly asking for double the amount of rent. This is in an area where the median income would have to be used for 80% of the rent. So people already were having a hard time making their nut. And it's just going to get much harder now because so many people are displaced.
Glenn, it's Kelly here. Can you give us a sense of how many properties are even available to be rented, or I don't know if it's Airbnb? I mean, how much inventory is there for all the people who are displaced right now to stay in something roughly approximating the area?
Well, there were 17,000 units heading into the fire. I think many people are now opening up their homes, trying to rent them out as Airbnbs. So it's a really volatile situation where we don't know just how many beds are going to be made available over the next month. We have seen communities like this in Tampa Bay and Hawaii recover more quickly than people realize, but it still is going to take a long time to rebuild all these homes, 2 or 3 years at the least. And LA is going to look completely different when we're done, just because it's been rezoned for much higher density than we had in places like Pacific Palisades or Malibu before.
So that's just one piece of the equation. So we're seeing the devastation taking place in California. Where that's going to go, we'll keep you updated on that. But now we want to scroll back and look at some. Basically, let's look at the bond market here for a second. The last part of this is an interview that I want to show you an interview with the bond market, how it's reacting, and it's still It's questionable as well. They're still waiting for President-elect Trump to come into office and things like that. But in the context, what we want to understand is, again, housing supply and demand. They just showed you on there. There's much less housing in LA, so the prices on everything are going to go skyrocketing. What's this also going to do about insurances? So now that's not enough bad news. Let's get over to see where mortgage rates are going, because Barry Habib, like I said, he's coming in at 5.75. Barry, I hope you're right. But let's take a look at what the bond market's, how it's reacting right now to a lot of these information we have right now and what's coming up this week. So take it away.
Here with me now is Steve Sosnick. He's the chief strategist at Interactive Brokers. CNBC senior economics reporter Steve Leisman joins us as well. It's great to have both the Steves here to kick things off on this Monday. And Steve Sosnick, there's a lot of people going, once things get this extreme, how many more days are rates going to go up? How much higher can the dollar get? But you say it all depends on what happens next week.
I really do, because the momentum clearly is stronger dollar, higher rates right now. But we're going to learn a lot, basically literally 1 week from now, when President-elect Trump becomes President Trump, and we see whether these executive orders that I think have got the market a bit fearful about the inflationary impacts of tariffs and potential immigration restrictions. Let's see if the market is sort of overpricing the negative here. It sort of would be an inverse of buy the rumor, sell the news, if they turn out to be less extreme than the market fears. Of course, if they are as consequential, well, then this trend can continue.
Can you kind of unpack a little bit this dynamic where we have both high and rising bond yields and a rising dollar? I might even throw in rising commodities, but you could argue there's some idiosyncratic things with Russia going on there. But which is driving which higher, or are they all being driven by the same news flow?
Pretty similar. In general, if you have higher rates in the U.S. or higher rates in any currency, it generally helps appreciate that currency because you earn more interest by owning that currency. In this case, also, we got a little bit of a kick on Friday because we learned that the labor economy is stronger than we expected. We shouldn't be expecting rate cuts anytime soon necessarily, and that freaked out the stock market to a large extent. The bond market reacted pretty much as it might have, but as you take the rate cut expectations off the table, well, then the dollar seems stronger against other currencies where you have central banks who are more likely to cut rates, such as the ECB or the Bank of England.
It feels like the bond market remains in the driver's seat this year, so I don't know what that portends for stocks. How do you kind of explain the path that we might take throughout all of this?
It depends why the bond yields are rising. If they're rising because the economy is stronger, well, then that's pretty good, and stocks can actually be resilient under that circumstance. There are plenty of situations where stocks and bonds can diverge for a while. Dom just mentioned that November 2023 was a previous high for the bond market. Stocks did pretty well throughout 2023. But again, if the economic story is good, well, they can diverge in that way. Yields can go up and the stock market can be okay. If it's because of inflation fears, if it's because of some sort of stagflation, all the negatives, and if the dollar gets sort of too strong so that multinational exporters, that the ones that dominate major U.S. indices, get their earnings impacted, that becomes problematic.
Yeah,
So basically, we'll leave it at that. So again, we want to focus in on the supply demand in your area. So if you're looking to buy this year, please do your research, know what your market's looking like, and please stay tuned every day because I try to give you the dynamics of what's going on with real estate. Today, we looked at a little bit of what's going on in LA, and then hopefully you can get some guidance on what's going on with mortgage rates. So what my prediction is right now, I'm going to say tomorrow the PPI is going to be, I'm thinking a little bit hotter than expected. That's why I advise my staff to lock in most of our loans right now ahead of the PPI coming in tomorrow and the CPI coming out on Wednesday. Now, I could be wrong. The benefit of working with a broker is if we're wrong and the rates deviate too much, we can have negotiation skills with our lenders to try to do a rate buy down for you or renegotiate a lower rate. We can actually move you to a different lender, and that's why being a broker is beneficial in this market. So my name is Dan Frio. What do I do for a living? Well, I do mortgages, folks, and that's why my goal is to help educate you guys and inform you guys what in the heck is going on with real estate these days. So we try to talk about real estate trends, what markets are doing. Tomorrow we're going to have Rick. He's the master of the Arizona housing market. He'll be live with us tomorrow, so tune in tomorrow if you're interested in tomorrow's housing data in Arizona. And Rick has a lot of insight into housing in general. So join us tomorrow live with Rick. And other than that, if you want to reach out to me and my team, Who do I do? What do we do? How do we do it? Well, just think of it this way. Our slogan for this year is one application, one credit pool. We're going to shop your loan to over 30 different lenders. How do we do this? Well, my name is Dan Frio. I work at ServBank. ServBank's the number 10 largest mortgage servicer in the entire country, and we're also a large mortgage brokerage set up with over 30 different lenders at this time. So if you want to work with me and my staff, we're licensed in all 50 states as well as Puerto Rico. We offer loans from FHA to reverses to DSCR programs to bank statement programs. You name it, we got it for you. And hopefully we can find your solution for you. So you can go to the rate update and put in your application right through here, or you can schedule a consultation right up through here with me, David, or Alan. If you'd like to do that, we need to know about you. We want to know your story. And we also want you to get to know us to see if it's a good fit. So if you'd rather call in, please do so as well. Just scroll down to the bottom of our website and you're going to find that information right down through there. It's 844-775-5626, or you can reach me personally at dan@therateupdate.com. And please leave your data, leave your question there. Don't put your questions down below there. You can leave comments and stuff, but if you really have a question for me to answer directly, please email it to me. Include your phone if you'd like me to give you a call. Thanks for watching. God bless. Hope to see you back here tomorrow. Bye-bye.